Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, August 22nd, 2008. Well, we saw a nice little push up in the markets today on extremely light volume, and when I mean light volume, I mean it was basically a third less than the previous days this week in volume. So you can tell that the doldrums of August are here, but that doesn't mean that the markets can't rally up like we saw today. Now, the key here is this, guys, is what do we see coming into next week? Because there is something we are seeing, and I'm going to discuss it later in this video, that could be very, very key to the action next week, especially early in the week. And I want to make sure everyone's ready for that when we go into it, and just to be aware of it, because you guys know that we've been basically directly on every market call over the last year and a half to 2 years, and we will continue, hopefully, to be as accurate as we've been based on our proprietary technical calculations. But before we get into the market analysis, I just want to remind everyone that next week, Tuesday and Wednesday, we have the Apprentice Webinar, a two-part series. And it's really not Apprentice. It's really anyone, pros or amateurs, could take this. We go over everything, all the proprietary stuff in depth. And that's the key here, guys, is that you're going to get the proprietary stuff that we discuss. The keys, really, that we use in analyzing the markets and making all these calls that we've made over the past 2 years. So you're talking about, what do we look for in volume? What do we look for in trend line? What patterns do we find to be the most accurate? What calculations and numbers do we find to be key? Is it 10, 7, 20? You guys can name tens of thousands of numbers here, but there are certain numbers that are extremely important in the market, and we've discovered them, and they continue to work dead on. So that's a lot of the stuff we're going to be going into. So it's very key to come and take that, and then you will find yourself as a much better trader. But just to remind you guys, you have it next Tuesday and Wednesday, and we're doing an evening one this time, August 26th, 27th, 6:30 to 8:45, 2 nights in a row. Alright, so you want to be available for those time periods, and it may run over. You guys can ask questions. We take questions. Basically, you call a 1-800 number. You're going to talk live to the presenter, Nick, actually, my partner, who's really the expert, the best ever I've ever seen in technical analysis, by far. You can see people on TV, they don't even come close to his abilities, and I've seen it firsthand as again, I am his partner. So in any case, keep that in mind, folks. It's a full-fledged webinar on a direct line to us as we discuss it, and you'll also be looking live at our computer screen through a link that we provide in an email. So it's a really two-fledged thing where you'll be able to talk and view all our slides of the webinar. Alright, and you can see here everything we'll go into, and there's even more that we don't even list here. We just list the basics, but there's a lot more in-depth stuff. Now let's get into the market and talk a little bit about today, because today was very, very interesting in a few different ways. Number one, let's talk about what the indexes did. The Dow closed up just under 200 points today, or 1.73%. The Nasdaq was up about 1.5%, or 34 points, and the S&P was up just a little over 1% today, 14.5 points. So it was a solid move up, but the volume was so light, and that's the way what you get here going, especially into next week. Next Friday is going to be dead because of the holiday weekend coming up. And today's Friday, you got one of the last few weekends in August here that people can go to the Jersey Shore or the Hamptons here in New York, where everyone heads out to. All the traders go, all the hedge fund managers and so forth, and that's what people are doing. So you see the light volumes on Fridays, and sometimes on Mondays you have that carryover effect. But nonetheless, a nice move up. But let's talk a little bit about the intraday chart. Pattern-wise, because of the light volume, not anything major in the patterns. You can see that generally the downside line of support held very nicely, and really you can see again, and we pointed this out a few videos ago, this bottom trend line has been working very well. If you can connect these first two lines, it really seems like the market continues to stay above the whole rest of the day. We've never really seen a major sell-off that has taken out that line, and you can see here, you had a nice push up, consolidation, bullish, in spirit of bull flag, breakout again. This was a little more of a drastic drop, but you came right into the resistance point again of the 50 moving average and the trend line right there. You broke up again, and you had a little zigzag into the close, but nonetheless a fantastic up move on extremely light volume. Now what we did see today was oil pull back. Now oil has been up big, and I want to talk about the USO daily chart because we called for the bounce last Friday. And the USO, let's see, where is that? Right here. Alright, so the USO right here. This is where the USO was trading when we called for the bounce right on this day. Since then, you got a huge bounce in the USO, basically from a low of 90 on the USO to a high of 98 and change or so here on yesterday. Now you had a big pullback today, and every time you get a bounce back, you're going to have to expect that pullback. The question will be is, do we come down and test this lower line again and finally hit that 200? And remember the key on the commodity bounce we called for. Alright, the gold chart was begging for a bounce first of all, but that's another story. Just on the mere fact of the oil chart right here, the USO, we talked about in depth multiple days in a row how we did not think it was going to hit this 200 because we saw that everyone out there was talking about how that's where they were going to buy. And you know from listening to these videos, from psychological analysis, which is a key component of any trader or investor, is that when everyone thinks it's going somewhere, they're not going to let it go there. Alright, and true to that word, you saw the nice bounce up there, then a pretty drastic pullback as it filled the gap today from yesterday's gap up and even went a little lower. So again, we're going to have to look at what oil does on Monday to really gauge the overall market and whether or not it starts to come down to this support. This will be support, and up here you'll have resistance. Alright, so the two lines again, the major supports right in here, and major resistance up here. After that, then you have the 200 as the next support. So it's very close supports on the downside. Once we get down to that 200, you have to expect some support in that area. Should we break, then it's a whole new ball game to the downside, and you have to expect oil to probably approach that 100 level if we were to break this 200. Now let's look quickly at the GLD to go over the commodities, because notice here, here's Friday, right? So look at this low here for the call that we made on this. The bounce up took us all the way to the 20 moving average. You guys know how we feel. Everything always goes back to the 20. That's first line of resistance. You get a bounce off. The first time you hit that 20, you always get a bounce back down. Sure enough, retrace back down. Again, filling the gap right into here. Beautiful gap fill. And now again, we'll look for what direction oil and gold go on Monday. Now, we are seeing, and I'm going to go to the markets on the futures. We'll look at the futures first on the daily chart. We can look at the SPY as well. Let's go right to the SPY. Now, the key here, folks, is this. Remember the line we drew, and this is another tremendous call to keep people safe, was this line. Okay? Support line, we talked about this last week, how the market needs to hold this line, and once you broke it, we said you have to wait for confirmation of the downside before you anticipate a further move to the downside. And we got a break below, and we said, guys, don't jump on board the short yet because we haven't broken to the downside. You have to take out the low of this day for it to be a true breakdown, because there's too many times where amateurs will get psyched out by market makers or large funds pushing the market one way to get them all to jump on the one way. So for instance, the short side here, only to take the market back up. And true to that call, we never took out that low of that day. And we talked about how it needed to recapture the 20 and the 50 moving average necktie formation starting here, which is right here. And if it did, it needed to get back above the trend line again to the upside. We talked about the resistance points right here, which is another key we're going to look at today, and we're going to watch for that. Now, this is the key, folks, is we never took out that low, and we were able to recapture the moving averages. Now, we're right on the cusp of this trend line again. Alright, and this is going to be resistance. Now, to the upside, we talked about this yesterday. This would be resistance, then this point, and how they were going to converge right here, over here next week at some point, and we'll keep that in mind. But the question is, now we're at the resistance point. Alright, this is resistance. We're hitting that line again to the upside. Can we break above come Monday? And we are seeing a few signs out there that are telling us that we may see a hard sell-off either Monday or Tuesday, alright? And it's not a high ratio. For instance, we're not seeing 7 of 8 indicators, 6 of 7 of the indicators that we really follow and calculate showing it, but we are seeing a fair number of them pointing to a relatively drastic one-day decline either Monday or Tuesday in this market, and we have to be aware of that. So that's why in the chat room today we talked to a lot of people about just being cautious going into early next week. If we can get through early next week, we should be okay. But you just want to be very, very cautious about that. It would just be a one-day rather large decline, and then we'd be back on the track for the continued upside that in the money stocks has been calling for over the longer time frame. The shorter time frame here, we are seeing a possible one-day decline either Monday or Tuesday, as just mentioned, and then we resume to the upside and test the highs again here and possibly go higher. But we can see here that the formations are possibly setting up for something like that. So be careful. That's all I'm pointing out here, folks, is just it's a not high percentage, but there is a percentage out there slightly higher than 50% that would signal that, right? And that's why, again, in the chat we talked about moving mostly in cash, at least to be safe. If it doesn't happen, it doesn't happen. No harm done. You just can go back in and feel confident again. But you always want to play on the cautious side, and that's the way we trade in the money stocks. We always are on the cautious side because preservation of capital and is number one in the book of anyone. All right. So enough said there. Let's go to the Nasdaq chart, and the Nasdaq had been begging for a bounce here, and I want to show you why. All right. The Nasdaq here had shot all the way up, pierced the 50, and then the retrace pierced the 20 on the downside, just like the opposite chart on the GLD and the USO, you could say, where they were piercing moving averages, especially that GLD. I think that was the chart we were looking at. Once you first pierce, you get a bounce. And I think that was the GLD, so we'll go remind you guys. All right, notice again, bounced up, you touched the 20, and you sold off. Same thing goes for the Nasdaq here in this chart. You sold off right into the 20, first into the 20, you get a bounce today. And that's just as clear as day, Technicals 101. All right, folks, enough of that. Keep in mind, watch Monday, Tuesday, all right? There's a small indicating chance there for a rather large decline. Join the chat room, join the Swing Trade Alerts, and the webinar, folks. This is the key, folks. You won't get it cheaper after this next webinar. So join that webinar. Sign up on inthemoneystocks.com, and we will talk to you next week. Take care.